And why that's important, of course, because it implies a 53% CAGR. Joining us now to discuss Tesla and some other stocks along the way a little bit later on, Jairam Nathan is Executive Director, Equity Research at Daiwa Capital Markets America, joining us from New York. And Robert Schein is CIO at Blanke Schein Wealth Management. Now, I want to start with you. Thank you both, gentlemen, for joining us today. Jairam, in terms of what we got from Tesla today, obviously a lot of bullishness coming through from Elon, this expectation that, we could hit that 2 million. Do you think that that's realistic? Because that's what drove a lot of the after-hours action in terms of the share price.
Yeah, no, hi, thanks for having me. So I think a lot of information to process during the discussion today. When, as you mentioned, gross margins trailed estimates, and the 4Q beat was probably low quality. But I think kind of the bad news ends there, and management, I think, did a great job setting realistic expectations for 23 and coming back to your 1.8 million number. I think that's pretty much where consensus is, and I think it is definitely achievable, especially given that they talked about strong demand post the price cut. So if you really look at the 1.8 million, that's just a 10% higher than the 4Q run rate. So I think that's definitely achievable, and also they kind of tamped down expectations of gross margins, improving significantly. They kind of said cost per unit will not go down to the 2021 levels in a hurry in 2023. But, at the same time, they kind of put a floor on gross margins. They said 20%, it should be over 20%. Now, if you look at consensus, probably around 23. So maybe there could be some more downside here, but I think it would be limited, especially given the benefits from production credits and things like that.
Okay, let's shift from the sell side quickly to the buy side. Robert, you heard what Jairam said. You heard the call. How does this influence in terms of your investment thesis for Tesla right now?
It's interesting because the takeaway, not only did Tesla beat on both the bottom and the top line number, which I think was a surprise to most on Wall Street for the most part. It's the forward guidance. It's the 1.8 million deliveries to now pushing it to 2 million, but hedging their bet by Elon Musk in the conference call. But also we want to take a look at the margin compression, right? The 24.3%. Is that going to come down moving forward? And what's interesting is that in China, when Elon Musk announced the price cut for the price wars in China, they also on the conference call this afternoon, they said that they're receiving demand 2-to-1 to production moving forward. So that's working in their favor. And again, at the end of the day, Tesla is the leader in EV, but they also emphasize they're also an AI company, which also says that they have a diversification moving forward in their balance sheet. And then in the future, and later this year, maybe even 2024, you've got the Cybertruck and a few other opportunities coming online for Tesla as well. So they're executing, they're mining, cost cutting. They're also optimizing internally in all of their factories to increase production and lower costs. That'll help margins moving forward.
Jairam, just on some of the things that Robert was mentioning, because we talk about the price cuts a lot when it comes to Tesla, but isn't it fair for Tesla to be doing this? They've got lower input costs to some extent. Perhaps that's going to be rising again because commodity markets have been fluctuating, but they were increasing prices last year. So for all of the, I suppose, aggrievement that they've been getting in some quarters, isn't this a better situation to be so dynamic when it comes to pricing, even if some want to suggest that it's just solely on a demand perspective?
No, absolutely. I think this was strategically a very good move. I think if you look at the Tesla can afford to take the price cut, and they specifically, they said in the call that the prices post the reduction reflect longer term cost structure, and they're also passing on some of the IRA production credits. And we think it puts a lot of pressure on competition, who was, some of the vehicles, are as much as $10,000 more expensive than a comparable Tesla. So I think this would put a lot of pressure on the competition side. And I think, we have to interpret, this comment about cutting costs jointly with the Nevada investment that they announced yesterday. I think that could be a significant development here. So, as you know, they're building a 100 gigawatt hour cell plant, which I think suggests that they have made some good progress on the 4680 And we are hopefully going to get some more cost reduction opportunity details in the analyst day in March. But yeah, I think they are flexing their muscle on being a cost leader in this segment.
Jadam, just one more from you, because another thing that a lot of people are obviously waiting for is the Cybertruck launch. They're going to begin production in 2023. Didn't say it was going to be material this year, but expects that in 2024, that's when you're going to start to see the impact. Do you think that it's a realistic competitor to the likes of the F-150 Lightning? Do you think it's going to have a significant sell-through in the United States, which is really where they're targeting?
Yeah, so, I think Ford and GM are pretty strong on the pickup side, but that doesn't mean Tesla won't gain share. I think they probably will gain the pickup share mostly, at least initially, from more of the Toyota, Nissan, and maybe the Ram truck. But the Ford and GM have their electric pickups kind of lined up. Ford is already selling them, and I think they are going all out in protecting that turf, which is a very high margin business for them.
Jadam, thank you so much for joining us and talking Tesla. Looking forward to speaking to you again soon. Robert, I do want to move on just a little bit, just in terms of, thank you so much, just in terms of the Cybertruck really quickly before we go on to some of the news of the day in terms of stocks and some of your stock picks. Do you think that we are going to see, because the Cybertruck, obviously, it's such an important car for Elon Musk in terms of really capturing that pickup truck market. In your view, would you be investing on the thesis that you are going to see significant exposure or, I suppose, saturation into the market of the Cybertruck?
Specifically on the Cybertruck, I'm not investing because that's the, another quiver in their cap over here moving forward. But on the broader terms, it's, a manufacturing technology company. So the information that they're gathering on the M3 and the Y, Model 3s, as well as the Cybertruck. Now, the Cybertruck will have, again, another TAM, a total addressable market, that will increase the opportunity for Tesla moving forward. But like anything else, we're going to have to wait and see. Elon, again, on the conference call today, said he's going to be driving it every day to work as soon as it's ready in production for him to, get behind the seat. And I think we're all, as consumers, waiting to see. So I wouldn't put too much credit on that. But what I would say is, moving forward, which wasn't said on the conference call, but it's been floated around right now for Tesla and the stock, is there's a potential for a buyback in 2023. So they got a strong balance sheet. They're executing, really, really well. We're seeing that happening in good and bad markets. They're also adapting. I think that's the key. As the economy changes, they're quick to adapt more than most. And I think that's the key to operational excellence, and that's what we're seeing with Tesla.
Yeah, that $22 billion on the balance sheet doesn't hurt. Just really quickly before we go to the break, I want to ask you one more thing about Tesla. Do you think they're overvalued?
Yeah, relative to you can't put them in the same category again as the Ford and the GM, and they're just a different company because of the AI opportunities. But right now they've run up a lot since the lows of 2022. So I'd be cautiously optimistic. Wait for opportunities. We still see markets pulling back a little bit earlier or a little bit later this year. So pick and choose your spots. But yeah, it's a long-term hold, but there's a lot of volatility. So it's not for the faint of heart.
Robert, stay right there. We're going to have a lot more to talk about following on from the break. And you're back on the street. Quick check-in on how the US futures are tracking. Are we still seeing a little bit of flatlining? Indeed, we are. Let's flick over now to Freeport-McMoRan because they beat on Q4 EPS. They're up by 4.6% in the regular session, despite lower copper prices from a year ago. They had a pretty strong December in that regard. The miner also saying worker shortages are limiting output, which fell 7% last quarter. Net income was down nearly 37% in Q4 from a year ago, but they actually beat on revenue. So it was 5.6 billion versus 5.45. So all in all, a pretty strong year so far. Let's come back with Robert Schein from Blanke Schein Wealth Management because he actually likes Freeport-McMoRan. And I've got to ask you, with all of the issues that we're seeing for some of the other copper majors in Peru, you saw Codelco also missing on their production for the quarter. Do you think that this is going to be a relatively bullish year for copper pricing? And ergo, you'd think that Freeport-McMoRan would do quite well in that kind of environment.
Well, they've proven it so far. Obviously, year over year, copper prices have surged. A lot of that is attributed to the anticipation of the China reopening, right? In terms of China coming back online and the need for global resources are tremendous. And copper is right in line, and Freeport-McMoRan in terms of, mining are really have some wind in their sail moving forward into 2023 when there's a lot of uncertainty across other market segments and industries. So yeah, we do like Freeport-McMoRan. They're up even 4% today, about 20% year to date. And it's anticipation of global growth right now. Even Europe is showing some signs of growth, which also bode well for the stock.
So in that regard, though, are you concerned that, because the obvious opposite case would be that if the prices rise too high, it's going to set a little bit of a demand squeeze? Or do you think that, say, the China growth story, for example, and all this infrastructure, and even if you look at, for example, the fact that there's still structural supply issues when it comes to US housing, that it's just upside?
Yeah, so you have to take it in two different camps. The short term, you're seeing the reopening of China, and that's also contributing to what we said before, which is the demand for copper right now. But long term, you also pointed out, which is structurally. I think that's what Freeport-McMoRan is talking about, which is there's just not enough. So structural wins and setup for the long term are great for the company, but not so good for around the world. And so they're there to capitalize on the resource and the mining of the resource. The demand is there. And then if you look at the EVs, the energy space, and the green sort of around the world transformation, that's a long-term tailwind for, again, the fundamentals of the business. So in the short term, you have China reopening. Long term, structurally, it's a good spot right now. And then you also have inflation that we're all dealing with around the world.
Exactly. And now, speaking of, I suppose, inflation and I suppose the macroeconomic impact more broadly, a lot of people have a lot to say about Microsoft. Some are reading it as the most dour set of guidance imaginable if you look at it from a read-through from a tech perspective. Others are suggesting, hey, it wasn't so bad. Their numbers were pretty solid. They're still having a pretty decent growth clip when it comes to Azure. So if you're an investor that isn't invested in Microsoft right now, at these kind of levels, is it attractive in your view?
Microsoft is a long-term hold for us. We, love it. Long-term, absolutely. If you listen to the conference call as we did here at Blanke Schein Wealth Management, the overwhelming theme from the management team was cautious for 2023. And we take that to heart because if you look at the cloud computing, the hardware, the gaming, all of that has been trending down for Microsoft. So it is a concern, but they're also working on cost cutting internally. So they're able to pivot rather quickly and they're reacting, and they're also managing through what potentially could be a recession in the United States for 2023. That being said, they have their eye focused squarely on growth. And what I like about Microsoft and what they said today, and we saw the announcement earlier this week, is the another investment of $10 billion into the OpenAI's ChatGPT. And that's for their search engine for Microsoft. And that's going to give Google a run for their money. So long term, the company is poised for growth and reinvesting for the future. So that's why we love it. Short term, they're managing their costs, and they're going to manage and sort of batten down the hatches to get through what potentially is a cautious outlook by management going forward.
Robert, really quickly, because we're almost out of time, I've got to go a little bit more broad with you. In terms of your expectations, I've been trying to work out by some of your commentary whether or not you're bullish or bearish in terms of the markets. S&P 500, are you thinking we're going to see some significant downside before a recovery, or is there upside?
We're positioning for something to happen in the short term for the first 6 months of this year. The reason for this is the lag effect of what the Federal Reserve has done last year, right? 450 basis points. They're going to continue to raise interest rates. That is going to affect the consumer. That's going to affect consumer credit. And it's also going to weigh on companies. And again, that's what we saw the cautiously optimistic approach from Microsoft earlier. So right now we're positioning ourselves, our client portfolios, to be, again, cautiously optimistic. We believe that the markets will discount the recession before. And so there's always that opportunity to get in dollar cost average as we see opportunities come our way. And that's how we're positioning. We do see later on this year potential for higher markets. But in the meantime, the volatility will continue because the uncertainty of what the Fed's natural impact is going to be to the markets is unknown.
Robert, thank you so much for your time. Really do appreciate it. That was Robert Schein from Blanke Schein Wealth Management. But shifting